Good morning, everyone. Sabah al-khair wa salam alaikum jami'an. So thank you for joining us for this end-of-year presentation on the financial results of Anwar Investments. We have a number of slides that we'll be presenting in the next 15 to 20 minutes, and then we will be opening it for question and answers. So as we've done in the previous presentation, we like to go through our portfolio. Next slide. So Anwar, as you can see here, has a portfolio of investments that are worth 47.8 million Omani riyals. About 65% of our portfolio is with our associate companies, so companies where we have a significant stake and we have a reasonable influence on the board. In addition to that, we have a number of different other investments that do not qualify to be categorized as associate companies. These include Bank Dhofar, Didik, and a number of small other investments. We also have a land that there was a plan to develop a hotel, so that is also in our books. The total value of our associate companies is about 31 million Omani riyals, and the balance, about 17 million Omani riyals, comes from our other investments. Here we're displaying an overview of our total P&L in the last 5 years. The purpose of showing this is that although there was a number of challenges in 2023, in particular with the performance of our associate companies, our overall total income and net profits and profits with other comprehensive income was quite healthy versus the past 4 years. As you can see here from this table, the share of profits from our associate in 2023 and the year ending March 2024 was the lowest in the last 5 years. We only receive about 559,000 riyals versus 1.4 million riyals last year. We will discuss this in greater detail in the next slide, where we'll be discussing the performance of each associate companies separately. But having said that, the diversification work that we've been putting in place has allowed us to generate, in spite of a lower associate income, we've been able to generate healthy income and healthy profits. As you can see, dividends from fair value investments, net change in investments at fair value through P&L, all of that had healthy income that was generated for Anwar during the year. And as a result, our total income during last year was the highest in the last 5 years. In last year as well, we made some write-ups which impacted some of the profits, but this is necessary as we realize that there's certain assets within our books that needs to be written off to represent the true facts on the ground. This is something that, with this initiative that we took during last year, just to clear certain items in our books. In terms of the expenses, we try to keep strong control over these expenses. Having said that, our employment costs during the year went up since we've hired an associate investment analyst who has been supporting us in analyzing certain aspects of our investments and new investment, and he has done a fantastic job. And as a result, we're able to make faster and better decisions. So this is a necessary part of our work. We work as a small team. The resources that we have right now is able to allow us to achieve the best performance for Anwar. In terms of financing costs, in spite of the challenges during the year as interest rate has gone up, we've maintained our strong relationship with our lenders, and as a result, we've been able to keep that cost fairly under control. We also have a slide on that to show you the impact of interest costs, but overall this is something that we've been able to manage quite effectively to keep our costs under control. So overall, we ended the year with a profit of about 1.6 million Omani riyals, taking into consideration comprehensive income as well. And this is the benchmark that we are held responsible here is the total profits plus the profits from other investments that is included below the profit line. So total profits with other comprehensive income was 1.6 million. And inshallah, in the future years, we'll keep on working hard to ensure that this profit is improved. This is just an overview of last year versus this year, so a little more details on the performance of 2 years. I've already spoken about a few of these items, but this is just a breakdown and providing a little more details. Now, as we saw on the first slide, our associate companies represent a significant part of our portfolio. These are companies where we try to be as active as possible. Obviously, they are publicly listed companies, and we have other shareholders who are also with us on the board of these companies. We work as a group, and we support them as much as possible. Now, what we've seen in 2023 is we've seen a turnaround in performance of a number of investments. However, there were certain investments that also underperformed. So if we look at Aman Chlorine, for example, we saw that although revenue was more or less the same in 2023 versus 2022, we saw profitability come down. That is as a result of the significant increase in borrowing costs, in particular with their subsidiary companies in the UAE and Qatar, which had a negative impact to their profits. So about over 1 million riyals in additional interest costs was incurred in 2023. We know that the company is working actively to make sure that they reduce this cost, since it's a significant part. It has a significant impact to their bottom line. And we're optimistic that during this year, they'll be able to secure more favorable terms from lenders. In addition to that, in 2023 versus 2022, there was a reversal of certain products that they sell, in particular with caustic soda. This is a cyclical commodity, so we've seen it stabilize towards the end of 2023, and we're hopeful that either this year or next year we'll see some appreciation. So the company is doing quite well, but obviously there's certain things that with good work that is coming from the management team, which is quite strong, we expect a better performance either in this year or in future years. With National Detergent, we've seen a return to profitability. So although revenue had not picked up significantly, we've seen a significant improvement in profits. So last year they had reported a loss of about 440,000 riyals, versus in 2023 they made a profit of 660,000 riyals. And we see that continuing. We've seen a very strong performance in the first quarter, and we hope that is something that will continue. We know that these are not one-off items. These are initiatives that the new CEO has put in place, which has allowed the company to improve. So we're optimistic about National Detergent. We feel strongly about it, and we feel that they'll continue to do better. Moving to Arabian Falcon Insurance, we've seen revenue to be more or less in line in 2023 versus 2022. And even if you look at the first quarter results, first quarter of 2024, you'll see that revenue has declined a bit. But having said that, in the first quarter of 2024, profitability has returned to a very strong way. It's one of the best performing quarter in the company's history. In 2022-23, on the other hand, we saw that profitability had declined, and that is as a result of two factors. One is the changes in IFRS, which required the company to take certain provisions, certain reclassification of the P&L, which had an impact in the company. And this is a one-off item, so all of the reclassification had occurred in 2023. We don't see that impacting future years. And the second issue was the motor claims, which had gone up, especially in the first quarter of last year. and then stabilize towards the second half. We've seen that the first quarter results were quite strong, so we feel that that is something under control. And inshallah, the company during this year will record very healthy profits in line with what we've seen, 3 years ago, 4 years ago, and maybe even higher. Our other investment, which we're working actively, is the school, Rawad International School, which have now been renamed to Ellesmere Muscat. So this is a school that during the last 3 years, there's been a number of challenges in retaining students and recruiting new students. The whole landscape had become far more competitive post-COVID with the entry of new schools, which provided world-class facilities with strong brand names and strong operators. So the school had to adapt to the new environment, and as a result, a number of actions had been initiated. So one of them is the partnership that we have with Ellesmere from the UK, where they are with us in the school. We have board members sharing along with us on the board of the school. And there's a long list of initiatives that we're working along with them, which will add a lot of value to the school, it will add a lot of value to the students. And I'm confident that this is something that the parents of the students in the school will appreciate going forward. So a long list of initiatives are currently being worked on, from student exchange program, teachers exchange program, in addition working on scholarships in the UK and the US. In addition to that, working on enhance some of the non-academic side of the school. So a long list of things that we have in the pipeline, which will inshallah will improve the school. We've also changed the principal, the vice principal. We've appointed a marketing person within the school, and we've outsourced certain marketing functions. So a lot of things that we're currently working on, which inshallah the next few years will result in better student numbers and inshallah better profits as well. Volta, we've been working very hard along with our partners on the board, along with the CEO and the management team, and we've seen excellent results during the year of 2023. So finally, the company has returned to profitability. So these are the highest returns since 2017. And we've seen also very strong returns in the first quarter. So we're also we're optimistic about the performance of Voltam during this year and next year. Management has taken a lot of initiatives, which as a result, we've seen better realization on the prices of transformers. We've seen them secure qualification from major vendors such as Saudi Aramco and in the UAE as well. So this will just open up the pipeline of opportunities for the company. In addition to that, they're working on setting up a plant in Saudi, and Saudi is a very vibrant market for transformers. So again, this is one of those initiatives that makes us feel bullish about the performance of the company, not just this year, but in the years ahead as well. Al-Maha Ceramics, after many years of very strong performance, we saw a reversal in 2023. And there's two components associated with it. One is the change in the market. The market has become a lot more challenging in 2023 versus the prior years. And we've seen this impact being reflected with the peers of Al-Maha. So if we look at Anwar Ceramics, if we look at Saudi Ceramics, Iraq Ceramics, most of the other companies saw revenue and profitability being challenged during 2023. So Al-Maha was not able to overcome those challenges, just like its peers in the sector. This is mainly because of the Indian talents coming into Oman in a far bigger way at lower price points, being a very strong competitor to the company. So that's the first reason we saw revenue and profitability decline. But in addition to that is their associate investment in Al-Hayr, which they've been some write-off during the year, since this is a plant that is currently operating, but not operating in such a way where they're generating profits. And as a result, Al-Maha had to reflect those losses into their P&L as well. So Al-Maha is working, trying to overcome these challenges, but the challenges persist. They had a better first quarter than the last quarter of last year. But having said that, the landscape is quite challenging. And we hope that by the end of this year, some of these challenges will be overcome. And finally, with National Biscuits, we saw very strong performance in 2023. We've seen very strong performance in the result as of, so the full year result as of March 2024 as well. We are also bullish about National Biscuits. Revenue is picking up in a healthy way. The introduction of new premium product is adding to the bottom line. And in addition to that, their ability to access a new market has really supported the company. The raw material prices for National Biscuits have been more or less the same as it was in the prior years. We've seen some softening in some of the raw material prices. So that should improve profitability even further going forward. Now, just in terms of a major component of our P&L is obviously our borrowing and the costs associated with our borrowing. We are a leveraged entity. We try not to be over leveraged in order to manage that risk as well. We've reduced our borrowing during the year from 17 million to around 15 million this year. The cost, on the other hand, has picked up a bit. Our average cost of borrowing last year was 5.7%. It has picked up to 6.1%, which we believe is fairly reasonable. We benchmark ourselves versus our peers, such as Anwar Invest and the other companies. And 6.1 is a fairly good number. In fact, it's the lowest within the investment companies, which are also publicly listed. So we feel that the relationship that we've been able to create with our lenders have been paying off, that during difficult times when rates have gone up, our lenders have been supporting us. So this is the final slide to our presentation. We will open it up now for question and answers. If anybody has any question, please feel free.
Hello.
So, hi.
Hi, good morning, Khalid. This is Bishan Bhala from Vision Capital. Can I proceed?
Hi, Bishan. How are you?
I'm very fine, Khalid. How are you?
I'm doing very well.
Great. Thank you for this call and this opportunity. Thanks for the update and sort of going into each investment in detail. Just had a few queries, so I'll just jump in. You mentioned about Oman chlorine. I'll just go one by one. Now, Oman chlorine, you mentioned that the caustic soda prices declined and the prices have stabilized. Now, as I look at Oman chlorine, the sort of difference in performance between, let's say, 22 and 23 and the first quarter of 24, the two things that stand out are consistently higher finance costs, which we've seen whole of last year, and a decline in the realization prices, because the company is operating at 100% utilization. Depreciation is what it is. So effectively, it's just a function of higher finance cost and sort of realization prices. Are these the two key factors, or is there something else that drives the performance? And how do you see this going forward in terms of prices reverting to sort of the peak that we saw in 22?
Okay, so so in addition to those two items, there was also certain one-off items in 2022.
Other income, yes.
Yes, so we saw a reversal of a provision in 2022 for their plant in Qatar. And as a result, we saw in the last quarter of 2022 a significant improvement in profit. So if we were to just remove that one-off items, the reversal of provision, the other 2 points are exactly what you mentioned, is the increase in cost of borrowing. Although their total debt has come down between 2022 to 2023, the interest cost had gone up significantly. So this is one of the reasons why you saw profitability go down about over 1 million riyals in loss in profits just because of the increase in borrowing costs.
Yeah, okay, fair enough. That's fine. That's on Oman Korean side. Next, I think you had just mentioned about, give me a second, about Arabia Falcon. Interesting comment over there. And in fact, one of the things I've noticed about Arabia Falcon for the last few quarters is that the company, if I'm not mistaken, is profitable on the operating side. And you mentioned they've had, they have some strategy around that. But if I look at the insurance market, unfortunately, we've had this change in IFRS, so it's kind of difficult to gauge the operating performance for a couple of quarters. And we're working with the insurance sector to get that sorted. But if I look at the operating profit for some of the leading players, who've consistently been profitable on the operations, have been loss-making, Oman United Insurance, National Life, Liva. So for Arabia Falcon, if I'm not mistaken, just to clarify, in the first quarter, or let's say last few quarters, the company has been profitable on the operations as well, or all of this is investment income? If you could just clarify that for us.
So there's been a few quarters where there's been, I know for sure that during the first quarter of 2023, there was a loss on the operating side. I can't recall exactly what was the numbers in the other quarters, but we saw that the performance had improved in the other quarters of the year. So it was mainly the first quarter where we saw a significant loss, which impacted the overall performance during the year. So that's the claim, especially on the motor side. That's where the impact was. But overall, the first quarter on the operating side, they were profitable. And one has to include the investment income, because that is also part of their core business of any insurance company. So if I was to combine investment income plus their insurance portfolio, overall that number has been a positive number in the last few years.
No, I'm completely with you on that, Khalid. When we look at the insurance sector, for us, investment income is as core as operating income is, because for a lot of insurance companies, the strategy is to probably maintain a 98 to 99% combined ratio and make money on the investment book by being, managing the equity and fixed income side. So I'm completely with you on that. It's just good to know that the company is also making profits on the operating side, because like I mentioned, some companies in the sector are bleeding on the operating side of the business. So this is encouraging signs, because you had mentioned that you expect profitability to probably revert or be higher in the last few years. These are encouraging signs for the company. So it's a good job as the entire team for Arabia Falcon and Anwar Holding. Yeah. Next thing with regards to Voltam, we've seen a turnaround, we've seen a change in strategy, we've spoken to the management. I think it's quite interesting in terms of how that company is shaping up. Just to understand, you mentioned diversification in your overall portfolio, and from being an industrial heavy player, you sort of have some investments on the financial side. Couple of things that we didn't talk about is Didik and Bank Dhofar, and you still have stakes in these two companies, right? So if you could just elaborate on what the strategy is for these two investments. It's something you're sort of looking at a sort of long-term horizon, or it's more strategic in nature, or it's more financial in nature. If you could just give us some flavor to these two investments and generally your approach towards the financial sector, that would be helpful.
So on the diversification side, what we've been doing, as you've seen, is that in the last 2 years or so, we've been reducing our exposure on the industrial side. So we sold the stake in Al-Mas Ceramics, we just sold the stake in Voltam. So that is part of our diversification, is that we're reducing our exposure in the industrial side, and we're utilizing that money to invest in other sectors. Now, one of those sectors that we've been investing is on the financial side. So our investment in Bank Dhofar has come from some of the proceeds that we had divested in Al-Mas Ceramics. So the long-term strategy for both Didik and Bank Dhofar, this is something that we are constantly evaluating. For us, at the end of the day, what we are most interested in is the bottom line on the long term. We don't look at short term. For all our investments, we don't look, at least for the large investment, we don't look at short term, we always look long term. So we have a positive outlook for both Bank Dhofar and both Didik as well, on the long term. And as a reason, we feel that at this point in time, it's worth keeping those two investments. But having said that, we're constantly evaluating those two investments. If at one point in time we feel otherwise, we feel that long-term will be better off with another investment, whether it's Bank Dhofar or Didik, then we will take the appropriate call associated with it. So there is no investment where we say it's so strategic that we do not see a situation where we will exit that investment. All our investments are investments that what we care about is the overall performance on the long term.
Noted. Thanks for that clarification. And in terms of sort of the exit, you mentioned you trimmed your position from 25% to 20% in Voltam. Could there also be a scenario where at the right price you completely exit these industrial investments that you've held on for a while?
Yes, I mean, exactly. Again, we do, we evaluate long-term performance. So then we make a decision whether we should exit partially or we should exit fully. So for Voltam, we have, like I said, we have a very positive outlook for the future. We've seen the company doing quite well in the first quarter. We've seen improvement in 2023. So we have to take a call whether we exit partially or we exit fully. And because we have a strong outlook, we felt maybe a partial exit is appropriate at this point in time.
Noted. And last question, Khaled, thank you for patiently answering. When we spoke last couple of quarters, you mentioned the reporting that you do is with a 1 quarter lag. So is that still continuing? And are there sort of any procedures in place to report the latest quarter numbers in line with what other investment holding companies do?
So it is still the same case up to this point in time. It is quite challenging because then we will have to see how we combine 2 quarters into one P&L, which is an issue when we develop our accounts. We may have to change our reporting year as well. So there's a number of things that will be as a consequence of that. So this is something that we have looked at, but we've not taken a decision whether to align our quarters with the quarters of our associate companies.
I mean, the reason I say that is because for some of the investments, I can still make sense by looking at the quarterly results of the listed companies and then actually seeing what your share of profit is for associates, etc. But for the entire P&L, it'll always be at a 1 quarter lag. So it just sort of takes away some of the analysis, intuition when it comes to with reporting for a quarter lag. I mean, that's my only comment as an analyst. Yeah.
And I do share that comment with you. It is if there's a lag period for associate company versus the rest of the P&L, which is no lag period, sometimes there's a bit of a distortion. We had taken that decision a long time ago because this is the best way to ensure that we represent the true numbers of all the companies. But I've taken your point that companies have been able to report numbers in a faster way in recent years versus prior years. And this is something that we can look at going forward.
Noted, Khaled. Thank you so much and wish you and the team all the best.
Thank you very much, Vishen. Joyce.
Hello.
Hi, Joyce. How are you?
I'm fine. Thank you, Khaled. Thank you for the presentation and the answers so far.
Thank you. Thank you for participating.
A quick follow-up on your answer on the discussion that we had on Voltam. So you have mentioned, and we are seeing that Voltam is on a recovery path, and you are very confident that for the next couple of years, Voltam will continue in the positive trajectory in terms of growth and everything. So, just wanted to understand the rationale behind you trimming your position in Voltam during this quarter.
The main rationale is, again, we want to be able to diversify our portfolio. We don't have a lot of dry powder. It's not like we're sitting on several million riyals of cash for which we can deploy in other investments. So the best way for us to do it is to trim down our exposure in the industrial sector as much as possible, not to a great extent, but to reduce it from where it is today. Today, it's almost 50% of our total portfolio. We feel a lower percentage in the industrial sector and a high percentage in other sectors will be healthy long term, just to avoid any challenging cycles that may arise in the future. So that's primarily the reason why we decided to reduce our exposure in Voltam. But Voltam is doing quite well, so there was no rush for us to exit in Voltam. But in addition to that, the price that we also got was also a healthy price. So we also, in spite, although we want to be able to diversify, we're in no rush in selling in any of our investments. So it's only at a certain price where we feel the trade-off between diversification and the proceeds that we get is the right balance, that is when we take those decisions. So the price that we sold Voltamp was one of the highest prices in recent history. So I think it's the highest price in 7 years. So that was a good price that we were able to trim down our position in Voltamp.
Got it, Khalid. That's only great from my side, and thank you very much for your time.
Thank you very much, Joyce. Thank you for participating. Any other questions, Mr. Khalid?
Hello.
No?
Hi, Khalid. Sorry to jump back in. Just wanted to check, when it comes to sort of making an investment in the financial sector or in general when it comes to investing, what would be the target sort of parameters that the company keeps in mind? One, of course, would probably be, is it about being able to influence the performance of a company by your experience, a financial sort of return target? If you could just give us some key pointers to that, so that it makes sense when we actually see some sort of top up or investment, we already know this is in line with what the management has said, or it could be something different. If you could just give us some key pointers over there, it'd be very helpful.
Yes, sure. So when it comes to the financial sector, what we've been focusing mainly is on the banking sector. And as you know, in the banking sector, for us to be able to have certain influence, so to have more than at least multiple board members, as we have in our associate company, that will be something that will be very difficult to require an extremely large investment to get to that position. So our investment in the banking sector specifically is not with the intention where we go and appoint a few board members and work on a turnaround of those banks. Overall, the banks, I think, are doing quite well, some better than others, obviously. But it's purely just for the sake of taking advantage of certain trends that we see in the market and to diversify to have a more diversified portfolio. Obviously, when we select which investment to make, we look at many different metrics. In certain cases, we look at purely trading, where we go in and buy a small quantity and then sell within a few months. In other cases, such as the case of Bank Dhofar, where we have a long-term outlook, we look at it from a different way. So there's many different things that comes in here where we look at, but our key point is long-term performance. So if we see long-term performance to be healthy and rewarding to Anwar, this is an investment that we will hold on to, or maybe even enhance our investment into that particular institution.
Noted, Khalid. Yep, that's it from me. Thank you so much once again.
Thank you. So we'll invite for any other further questions, but if there's none, then we will close off. So another minute or two. If there's no other questions, then we'll close off this session. So thank you very much for participating in our end of year presentation on our results. We are always available. If you have any questions, do feel free to contact us. We'll be happy to share the information, answer to your questions within the periods between these sessions. So thank you once again, and take care.